Good day, ladies and gentlemen. Today I want to teach you a very interesting and simple strategy that you can use to make money in the forex market. This strategy is very simple. If you're a beginner, you'll be able to apply this strategy and get a very good result. Okay, so this strategy is simply the pullback strategy. Okay, so what do you need for this strategy? The very first thing you need is to understand what a pullback is. So when market is moving in an uptrend, you're going to have higher highs, higher lows, and higher lows like that. This being your HH, okay, your higher high, while this is going to be your your HL. So you're going to have higher highs and higher lows following each other like that in an uptrend. And when you have a downtrend, you're going to have lower highs and lower lows. This being your LH, your lower high, while this is going to be your lower low. Now, the thing is, a pullback is simply a momentary pause in the direction of the trend. Okay, so if the trend is upwards, a momentary pause will be a movement in the opposite direction before the trend continues. So with this pullback strategy, we are trying to catch these points where you have your pullback, and then we enter in order to continue with the trend. That's the idea, and this system can help you really get a very good trade. Also, the reverse is the case. When you have market moving in the downward direction, it has a momentary pause whereby market moves in the opposite direction for a very short while and then continues in the direction of the trend. So this strategy helps you trade in the direction of the trend, and that's a very good thing, because as you already know, they say the trend is your what. If you know the complete statement, please drop it in the comment section. The trend is your what, so tell me what it is. All right, so we are going to be trading in the direction of the trend. One of the reasons why a lot of traders don't do so well is because they try to trade against the trend, or they don't give consideration to what the major trend is. Are the buyers really in control, or are the sellers really in control? They don't care. They just look at the chart and then enter trades. Okay, so you need to know what the trend really is, then try to look for opportunities to follow that particular trend. All right, so what you need for this strategy, like I said, you need to know what the current trend is. You need to know what a pullback means, which I have explained. So now let's go into the rules of this strategy. The rule of this strategy is a valid pullback should have a minimum of 2 candles in the opposite direction. That's what we are going to term as a valid pullback. Okay, so if it does not have up to 2 candles in the opposite direction, we are not going to trade it. So what we do is, once we've seen 2 candles in the opposite direction, we wait for a candle to form which is going to be moving in our direction. That particular candle, at the close of that candle, that's when we enter to join the party. We enter to join the trend. Okay, so let's go over a few examples. What do we have here? What kind of trend is going on here? This is an uptrend. You see, market pulled up, gave us a pullback, but we are not going to enter on that pullback. We won't enter on that pullback because based on our rules, look at this. This is an upward movement. We had a pullback, single red candle. We had a continuation, but we won't enter with that continuation because the pullback does not contain 2 candles in the opposite direction. So we only enter when the pullback contains 2 candles in the opposite direction. So look at this. Upward movement, 2 candles in the opposite direction fits our criteria. Then we must have a continuation to confirm to us that market still has interest in moving upwards. So after this candle closes, this is where we enter our buy trade in order to join the party to the upside. SL can be a few pips below that candle. Okay, so you can see what happened. Market pushed up, and gave us some money in the upward direction. Okay, this is not an 100% strategy, but at least up to 75% accurate. And as you already know, you don't need an 100% accurate strategy. All you need is your risk management. Okay, with a good risk management, a strategy that can deliver 50% is good enough. Okay, with good risk management, that's why you also need to take risk management into consideration. So something else I did not mention, I just remembered now, is you need to see a push. Okay, you need to see a reasonable impulsive push before you start looking at pullbacks. Okay, so let's see, we had a push, this is a push, but the pullback is just single candle. Then we had another green candle, but that green candle can't be considered as a push because it's just a single candle. So we just keep waiting. This is another push right here in the upward direction, single candle, we can't trade it. So you just keep checking until you see what fits your entry criteria. If you want to consider this red candle as a push downwards, this is just a single candle pullback, so we are not going to enter. If you consider this set of red candles, because it's looking as if a downtrend is about to kick off, this set of red candles as a push downwards, single candle pullback, we are not going to enter. Okay, so this is gonna make you miss some trades, but it's better to miss the trade than enter and you get stopped out. Okay, so if we consider this to be a push, then we add up to 2 candles, we wait for a red candle to form. This red candle formed, we enter right here to go down. That would have stopped us out, so that was not a good trade. To make this system even more accurate and better for you, you can add the 50 period moving average. So anytime the candles are above it, you should be looking to buy. When candles are below it, you should be looking to sell. So that will be like an extra confluence. Okay, so let's look at this. What do we have here? Just a single candle pullback, so we wouldn't have entered a buy trade. Let's look at this. Okay, so we had an aggressive push to the downside, 2 candles pulling back, and then a single what's it called, a candle in the direction of the impulsive move. Okay, so we enter right there, we enter right here, SL above this, we would have caught one of these downwards movement. So basically that's just the idea behind it. You can do your back test to see how this works. I was dealing with a particular student of mine. He happens to be one of my mentorship students, so I jumped on Zoom with him and we're having a class, and he was asking questions, and I told him something very, very important, which I'm going to share with you here for free. No matter what you learn from any mentor or what you learn from anybody, don't see what you are learning as from your mentor or from a guru or from whoever you think is ahead of you when it comes to this forex industry. Don't see it as if it's set in stone. Okay, it can be fine-tuned. That's where you now have to bring your seriousness to the table. Okay, bring your seriousness to the table. It can be fine-tuned, it can be made better, it can be made more effective. You can see, as I was talking about this strategy, I quickly picked it up in my head that, oh, this strategy, you can actually fine-tune it by adding a 50 period EMA. Only take trades, buy trades when it's above the EMA, sell trades when it's below the EMA. So things can be fine-tuned. You should work hard at being able to take a strategy and look for a way to make it work and personalize it. Okay, so don't just take things and say, oh, this is how it was said, so you are afraid to maybe bend some things to make it work out for you. You are very, very free to do that. Okay, nobody has a monopoly of the market. You can bend things, so long when you bend it turns out to be more effective for you, fine. Okay, so that's just what I wanted to quickly talk about. So if you got any value, look at this. Let me take this last example. You had an impulsive move. I think it's best for you to always look out for an impulsive move before the retracement, like I said. So the pullback should be after an impulsive move. If it's just a few candles that are not really pushing, then the pullback will not really pullback system might not really be very effective, because I can see that when you have aggressive moves like this and then you have the 2 candle pullback, it makes more sense. Okay, so after the 2 candle pullback, you had a continuation, which is this bullish candle. SL would have been below that candle, your SL would have been below that candle. You would have entered a trade to buy, and as you can see, you would have made money as price moved to the upside. Okay, basically that's what I have for you today. If you are a new viewer, please subscribe.